Hello, good afternoon. It's Adil Fazal here, market analyst for CFDs.com, your leading spread betting and specialist in CFDs. Also, be sure to visit CFDs.com for your trading needs, CFDS.com. Alternatively, you can visit the CFDS.education website to certainly keep up to date with the latest charts and analysis on the markets. Okay, let's try to decipher exactly what the Friday's bullish candle means. That's probably the best way of explaining it. Okay, so the US markets on Friday could close very, very impressively higher. Negated Mr. Draghi's incoherent, inconsistent with his expectation speech. Okay, that's probably the best way of describing it. Okay, basically, it was a dud. Okay, that's probably the best way of understanding it. He basically failed to meet expectations with his monetary policy. And the markets obviously punished him for that. Okay, the shorts were squeezed, a gigantic squeeze. I think it was one of the largest squeezes for quite some time. Quite an impressive squeeze on the euro, and obviously the dollar has collapsed ever since. Now, if I just bring up a chart of the dollar itself, let's just look at the dollar and see exactly how this market is responding. Look at the bonds as well, the 10-year. Let me just bring up the chart of the dollar first. Okay, here we go. So, even though we had Miss Yellen hawkish, even though we had the markets pricing in a rate increase given the post NFP, etc., that was irrelevant because the whole concept was, or the whole theory and the concept was monetary policy divergence, and that obviously when the markets stopped diverging, then from a fundamental point of view, the market had already factored in, with the dollar index being at the lofty heights at this double top region, at the lofty heights, had already factored in all the rate increase in December, etc., etc. What they didn't factor in was Mr. Draghi obviously failing to meet expectations with his dovish or expected overtly dovish stance, and that obviously didn't materialize, and obviously you had a collapse in the dollar itself. So given the fact that everybody expected Mr. Draghi to certainly increase the QE to 75 billion a month, okay, that was one of the main points of interest, and obviously you continue to play the monetary divergence, and obviously that if that doesn't occur, then you get a total unwind, and that's exactly what we've seen thus far. Now, obviously we're holding the 50 MA so far, we're holding previous resistance equals support, so therefore dollar still remains bullish given the fact that obviously the NFP supports the argument of a strong dollar, and given the fact that rate increases are certainly there, and yes, you do have monetary policy maintained at 60 billion, and you are going to get it reinvested, and it'll continue further. But given the fact that the expectations were not met, and therefore you had position squaring, etc., etc., and that's what led to the actual sell-off in European markets. Now, the next day, what happened? We had stronger economic data, and the US markets certainly have started to rally and totally ignore Mr. Draghi altogether. So it's an interesting conundrum, and one we'll have to tackle when we come to Monday's trading. Okay, right. In terms of the weekend, we've had two incidents, I think, over the weekend, or the main incident really was the fact that we had this terrorist incident in the UK. Now, from a FTSE 100 perspective, that will certainly be bearish because we have terrorism in the UK, plus we've had flash floods that have certainly hurt Cumbria, I think, or in other parts of the UK in terms of economically speaking, so that will certainly be a risk-off scenario for the FTSE come Monday. But in terms of US markets, let's just try and decipher now. The Dow certainly closed up 2%. Everything closed up. Nasdaq up 2%, the S&P 500 up 2%. So let's try and decipher exactly what this means, okay? So first of all, economic data itself out of the US was strong. Therefore, from a fundamental trade perspective, given the fact that, we had non-farm payrolls above 211k, unemployment rate still remains stagnant at 5%, labour force participation more or less slight increase, average hourly earnings still there, still more or less stagnant, labour productivity, that's Canada, and literally it was all about hawkish Yellen plus obviously rate hikes plus economic data justifying that. So the theory in which why people bought the US markets on Friday is the fact that the US economy is strong enough to withstand a rate hike, and therefore you want to be buying the equity market in order to obviously expect higher share prices going forward, earnings per share, growth, etc., etc. Okay, we all know the market. This is an inefficient discounting mechanism. Okay, so let's try and decipher the market from an intermarket analysis perspective first of all. Now we all know that the oil price is very important, and commodities are very important, especially when it comes to the FTSE 100 and the S&P 500, and also to the CAC to a large extent. Now, one of the obviously bearish arguments on Friday was the fact that OPEC obviously failed to come to a conclusion in terms of, even though there was a rumor prior to the meeting, they failed to come to a conclusion in terms of potentially limiting output. And even though the Saudis and the Iranians, they disagree, there was a rumor that they would come to some sort of conclusion for the sake of maintaining a certain level of certain price. That obviously has not materialized. That totally failed, and the market obviously has been punished accordingly. Now, you are into this double bottom support, so again, as traders, that's something that we all need to be aware of. Even with the bearish news in terms of the OPEC obviously not coming to an agreement, still the price of oil has been pretty well sustained, or has held support at the 39 level, or just sub the $40 level. So again, we have this falling contracting wedge pattern, so all eyes on this falling contracting wedge pattern from my perspective, and there is obviously a very high probability of breaking out. Now, given the fact that this policy divergence trade has failed, now bear this in mind, I think this will be very important, so listen carefully. Given the fact that this policy divergence trade has failed, given the fact that Mr. Draghi has failed to meet expectations, and obviously has shifted expectations, especially given the fact that we've had this article. This is a very good article, by the way, folks. I'd encourage you to all to read this. This is via Reuters. Okay, ECB lowered stimulus ambitions after hitting opposition. Hints by Mario Draghi ahead of the Thursday ECB meeting. Blah 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 blah. Big injection backfired, stiffening the resolve of more conservative central bankers, i.e. the Germans. Okay, ECB president and his chief, etc., 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 had given, obviously had increased expectations of an extremely dovish stance. Now, the reason why they held off, this is very interesting. Pending US Fed hike, okay, also factored into the decision. So the Federal Reserve rate hike factored into the decision, which I think a lot of people obviously had that, but ignored. Though to a lesser extent, as policymakers were concerned that a big move by the ECB would weaken the euro further and possibly force the Fed to delay its own action on rates to prevent a too rapid divergence. So they are concerned about the divergence. This is the key, okay? They are very concerned about the divergence on monetary policy, and also they are facing opposition too. The ECB cut its deposit rate on Thursday and extended its monthly asset buybacks by 6 months. So obviously they increased the duration of this QE by 6 months, okay, etc., etc. But the moves are considered by markets to be bare minimum. Obviously, that's the case. Hence the reason why we had a massive sell-off in Europe. One source with direct knowledge of the situation interpreted Draghi's public stance ahead of the meeting as trying to pressure the governing council to take bigger action. That's very interesting, okay? So given the fact that he didn't do anything, the stock market's collapsed. Now central bankers will think twice. So he's trying to play a game of chicken, okay? Draghi raised expectations too high on purpose and attempting to paint the governing council into a corner. Again, very interesting, okay? This was problematic, and he was criticised for this by several governors in private. So given the fact that he was overtly very, very dovish, intentionally very, very dovish, expectations were there, obviously he failed to actually maintain that stance. The stock market would punish him, and obviously the stock markets would spiral out of control, and then the rest of the governing council that are there, they would have to bear that responsibility, because they didn't align themselves with him in terms of his extremely dovish stance and obviously maintain equity prices going higher. So it clearly shows that there's a split amongst the ECB, and that's not exactly good news going forward, okay? Again, that's an interesting situation and scenario. So this is going to be very interesting for European stocks now, and this is why European stocks were lagging to a large extent on a Friday, and US markets certainly started to uptick higher. Now, one of the things that I could comprehend as to why the US markets rallied so decisively or so substantially was, number one, OPEC. Oil prices still remain low. And number two, the lack of QE going forward means that all that excess money that Mr. Draghi was supposedly, this is the theory, supposedly increase of 75 billion, and that increase of 15 billion had to find a home, okay? And that home was supposedly US stocks. Hence the reason why we had the Nasdaq touching all-time highs, etc., etc., okay? Even though we had a double top, that double top on the Nasdaq has certainly been negated. Well, not negated, but it certainly has been put into question again. And you can clearly see that on the daily chart, okay? You can see that on the weekly chart, so daily and weekly, you can see that, okay? So that additional 15 billion that was apparently going to be obviously passed through, but according to Draghi's philosophy, that would have obviously propelled the Nasdaq higher, because that extra 15 billion would have to have found a home. The DAX would have moved higher, and obviously would have took the Nasdaq with it. Now, that's not the case anymore. Okay, hence the reason why I was baffled at such the stellar move on a Friday. So number one, oil commodities getting hit, and number two, obviously you had this the likes of the additional or lack of QE, and obviously that causing pain in equity markets as well. So again, double top I still expect to hold, okay, given the fact that Mr. Draghi has failed to do the additional 15 billion. Yes, we do have the strong argument of economic fundamentals in the US being stronger, hence the reason why you're seeing the Nasdaq being justified and potentially breaking higher. That is also an alternative theory, okay? So you have to be flexible. If the markets embrace that second theory that I've mentioned, that economic fundamentals are strong and therefore going forward we are going to do well, then yes, go ahead and buy the Nasdaq, okay? Now the other situation as well, which I found quite confusing as well, is the fact that the US markets have certainly rallied strongly, even though we had a weaker Shanghai market. Again, that was very baffling, okay? Very, very confusing. Even though we had the Asian markets, I mean, the Nikkei was down almost 2% overnight, the Shanghai almost 2%, and yet we negated it all. And you can clearly see you have a bear flag formation on the Shanghai index. You're consolidating within this red candle ever since we had that 6% crash on the Shanghai. So therefore, how can the Nasdaq move higher when the Shanghai is holding 75%? So the rally on Friday is circumspect, okay? And that's really my conclusion, okay? But we shall see. I mean, I'll try and keep a neutral stance as much as I can. I will confirm that I am short the markets going into Friday's close, and I certainly have a bias with my analysis, but we'll see whether or not. I'll try and be as impartial as I can with my analysis, and I'll certainly entertain every potential scenario, okay? So let's start. Okay, so let's start with the S&P 500 first and foremost, okay? So looking at the daily chart, or should we go to the weekly first of all? The weekly is, we're still within this red candlestick, okay? So this red candlestick on the 9th of November, the market is currently still trading within that red candlestick. We failed to propel higher, and there's no real reason why we should break that, okay? Given the fact that the lack of QE from Mr. Draghi, that's my main argument, okay? You're still making this concept of lower highs, okay? And you could still potentially retest that 2020 level below, okay? Again, remain open to it. 60-minute chart, you are now coming into resistance at 2094 to 2097 on the S&P 500, and therefore I am expecting weakness, especially given the fact that we've bounced off the pivot low from 2040 up to 2090. I mean, that's almost a 50-handle move. 50 handle move, okay? Also in the last hour we certainly had volume increasing on the sell side, and therefore you are expecting a gap down on Monday, okay? Now again, horizontal resistance, you're breaking out this rising contracting wedge pattern in the S&P 500. Your first support will be 200 MA at 2083, and the next support will be down below at 2070. Again, be aware that you do have a unfilled gap below at 2050, and therefore the market is certainly vulnerable to that being closed, okay? Going and cross-referencing the actual move on the Nasdaq, also the S&P 500 with the likes of the Russell. Again, look at the Russell. Again, weak. Okay, I found horizontal resistance just around 61%, and therefore weak, and therefore confirming that the S&P 500 is weak as well. Now look at the daily chart. It's an inside bar. So how can the S&P 500 move higher? That's the question you need to ask yourself. It's an inside bar, bearish consolidation, and we are looking for a potential move and a thrust lower. So you're looking at consolidation here, and you are looking at potentially testing the lows again, okay? Due to a lack of QE, okay? 60-minute chart, again, feeble. Ever since we bounced off gap fill, feeble. I mean, we're into that 50% horizontal resistance as well here, and compared to the move on the S&P 500, nothing of the sort, okay? So again, certainly weak from my perspective, and you are looking at further weakness on the Russell itself. Okay, so not confirming the move at all. That's a worrying concern if you are a bull. Now going to the Wilshire 5000, which is a broad-based, obviously, index. Now again, we're in no man's land. Daily chart, nowhere. I mean, it's a bullish engulfing candle. Where exactly are we? We're not really trading in any particular trend as such, and then we are into that fib 75% resistance, and therefore from there you would conclude that US markets are into resistance. That's my interpretation thus far. Okay. Now let's have a look at the Dow. Okay, the Dow Industrials. Always, again, you're back into no man's land. Really, it's a bullish engulfing candle. Where exactly are we headed? Again, you're looking at your fib, looking at your horizontal resistance. You are back into resistance on there, and therefore you are looking at further weakness. Okay. Now looking at the Nasdaq. Now let's just bring up the chart of the Nasdaq. Again, I think I've already discussed that, the fact that we have a double top on the Nasdaq. So again, that certainly is bearish going forward. Okay. In terms of the Nasdaq, double top resistance on the daily chart certainly is resistance. Yes, we did retrace more than fib 75%, so certainly have to respect that potential move. I mean, that's one hell of a move, but bear in mind you do have an unfilled gap that needs to close at 45.65. So again, this is really overstretched and overbought to a large extent. Okay, quite a substantial extent. I mean, you can certainly double check this by looking at the RSI and see exactly where the RSI is positioned. Okie dokie, yes, so we're coming and approaching that potential $80 level on the RSI. So again, interesting. Okay, so this will be interesting going into Monday's session. I'm certainly expecting a gap down, and that's my bias at this current juncture on the S&P, on the Nasdaq itself. Okay, cross-referencing that with the semiconductors with an inside bar, so no real bullish momentum or move higher on the semicons, and therefore you are looking for further weakness on the Nasdaq itself. Cross-referencing that with the Nasdaq Biotechs. Let's just bring that up for you, and let's just cross-verify it. Okay, bear with me. Where are we? Oh, there we are, biotech. So again, biotech's inside bar. Okay, so biotechs and semicons both inside bar. So how can the Nasdaq move higher? It really is baffling at this current juncture. Okay, so again, the bears certainly are in control. Now looking at the ETF of the iShares, or Russell 3000, again, it's an inside bar on the daily chart. We failed to negate it, and it certainly wasn't an outside bar at all. It was an inside bar, and using your fib retracement, you are back into that fib 75% resistance. So therefore, again, you are looking at weakness in US markets and looking for a gap down on Monday. That's my interpretation thus far. Okay, so the Nasdaq, the Dow, certainly all weak and indicating further weakness. Now, let's just cross-reference that with the actual sectors themselves. Looking at the financials, financials are back into that resistance zone on the 60-minute chart. Daily chart certainly is back into that zone of resistance and failing to move potentially higher. Looking at the energy sector, yes, we've closed the gap below. Certainly have held that gap, so certainly have to pay homage and respect to that. But given the fact that oil prices still remain below that critical level, therefore you are looking at further weakness for the price of oil. Okay, you do have potential support further lower, and that may well come into support for now. The ETF of retail is an inside bar. Okay, so far, so no real outside movement or in terms of real thrust higher that would justify the bulls certainly coming in here. That certainly has not been the case. Okay, looking at the home builders as such, inside bar. Okay, again, so therefore no real outside movement or bullish movement itself. Consumer staples probably the only one that really is putting in a very, very bullish candle. You do have resistance above, so again it will be interesting to see if this move can be sustained. The fact that we had you have utilities as well, a bounce. You have industrial sector inside bar, so no real significant bounce or a move higher as such. Consumer discretionary, again inside bar. Metals and miners, this is an interesting one. We need to see whether or not this can actually potentially put in a bottom and start to put a reverse in the market itself. So interesting times. And looking at the 10-year potentially into support now on the daily chart, and therefore you are looking at weakness in the dollar itself, so bear that in mind. Okay, so you are looking at a potential thrust higher and obviously a weaker dollar, so this will be very interesting in terms of the market and how it's being played. So again, keep an eye out for that potential dollar strength, and obviously, as we all know, dollar strength isn't exactly good for equities, especially for commodities. So this is an interesting scenario. What exactly is going to happen here? Okay, this is going to certainly push yields higher and therefore push the dollar higher as well. Okay, interesting. Right, okay, so I think that's a summation of US markets. Again, I am looking for weakness early on Monday, and we shall take it from there. You are looking at support at 2083. You have previous resistance equal support at 2079, horizontal support and previous resistance equal support at 2070. I mean, I'll just draw them in for you now. These are all the potential support and resistance zones that I'm going to see. Okay, coming into play early Monday. So again, we should definitely touch the 2079 and 2070 level, and then we shall see how the market responds thereafter. Happy trading. Wish you the best in the trading week ahead, and be sure to visit cfds.com for your trading needs. Goodbye.